So what is parabolic SAR? Well, the term can be divided into two parts, the parabolic part and the SAR part. A parabola is an important concept in abstract mathematics. Luckily, you don't have to be a math whiz to understand and use parabolic SAR. In fact, even though the methods for determining a parabolic curve are complex, it's very easy to use parabolic SAR. Secondly, we have the SAR. This stands for stop and reverse, though many people say support and resistance. The parabolic curve creates a line on the stock chart working much like support and resistance. The parabolic line is only above or below the stock price. When it's below the stock price on a chart, it forms a trailing stop. A trailing stop is a stop loss that is adjusted each day. Instead of a firm stop of, say, $10, a trailing stop adjusts from day to day. The idea here is that if a stock falls through the trailing stop, or support, that you should sell. On the other hand, if the parabolic line is above the stock price, then it forms a reversal line, which is much like resistance. As stated on the previous slide, parabolic SAR can tell you when to buy or sell. It can also tell you when to go short or cover an existing short position. But parabolic SAR is also useful as a bullish-bearish indicator. Even if you don't get into a stock when parabolic SAR tells you to, it's still seen as bullish when the parabolic line is below the stock price and bearish when it's above the stock price. Oh, but here's the catch. Parabolic SAR only really works in trending markets. In sideways markets, parabolic SAR produces a lot of whipsaws, where the indicator goes from bullish to bearish and back again quickly, rendering it essentially useless. With that in mind, it's important to establish the dominant market trend first. This can be done a number of ways and might be a topic of a future episode. But for now, let's get back to some more of the specifics of parabolic SAR. As stated earlier, it's incredibly complex to calculate, but the good news is you don't have to. Even Yahoo Finance offers parabolic SAR as a chart overlay for free. When you use parabolic SAR, you have to select parameters. Parabolic SAR's inventor, Welles Wilder, who also invented relative strength index, by the way, recommends a step of 0.02 and a maximum step, sometimes called a leap, of 0.2. Okay, let's take a look at an example. Notice the red dotted lines. These form the stop/support and reversal/resistance lines. Our chart starts out with the stock in steep decline, which is reversed on March 24 at 24.14, marked buy. At this point, the parabolic line switches from a reversal line atop the stock price to a stop line below the stock price. When the stock next falls below the stop line, it's time to sell. This happened on April 14 at 25.51. 6 days later, on April 20, the stock once again pierced through its reversal/resistance line, signaling a buy at 25.33. A sell was later signaled on May 4 at 26.33. Finally, we got back into the stock again at 25.62 on May 19 and sold out at 28.28 on June 28. Let's recap. If you'll notice, every time we bought the stock, it was for less than the price we sold it for earlier. If we rolled all our gains back into subsequent stock buys, our cumulative gains would have been 21.25%. Some final thoughts. Parabolic SAR trading assumes that time is the enemy, and thus it's a get in and get out quick system. This can be good or it can be deadly. For instance, if your position size is small, your gains can be eaten up by transaction costs. Secondly, parabolic SAR only works if the market is in a confirmed trend. And finally, although parabolic SAR was the only tool used in this example, the results may not be typical. It's always best to use a wide variety of technical tools to get confirmation of your trading theses. We hope you've enjoyed this video newsletter on parabolic SAR. Thank you and good trading.